Welcome to TradingStopsLive.com. We're looking at First Solar, symbol FSLR. We're going to talk about making money using upward channels. Each one of these bars that you see are daily bars. So we're not looking at, now you can use channels in different time formats, such as 1 minute, such as 3 minutes, such as 5 minutes. But for the purpose of this video, we're going to use daily bars. All right. So this is an upward channel that you see. Anytime you see a stock trading within a particular range, and just bounces back and forth in this range, this is called a channel. But this is an upward channel because the lows, each low is higher than the next low. You see, this is a low, this is a higher low, this is a higher low, this is a higher low in regard to the previous low. The same deal with the highs. This is a high here inside the channel. This is the next high. This is the next high. But each high and each low is higher than the previous one. But as you can see, this stock is trading within a predictable pattern. A predictable pattern, you see the stock comes here, touches this line. Now we take this line, run it straight up, and we see, now this line can just run straight up infinitely until it's broken out of this channel. And we see, and the stock is trading right in this predictable pattern. So whenever you see it, now a pattern is defined that whenever a stock does something twice, this is like the First Solar comes down, hit this point one time. We extend the line out. This is the second time. So the second time, the second low is a buy point, especially when you see a stochastic that is oversold. So now we see the stock is oversold. We see the stock is trading on this trend line, which is this upward trend line inside the channel. So this is certainly a point that you want to consider buying. Now, when it happens a third time, which is right here, you certainly want to consider buying this, and that's what we did. In fact, I've been trading this stock all throughout this year. You know, we here at TSL, we caught it here, we caught it here, and we caught it here recently for a very good gain. Now, the interesting thing about this particular buy point right here is not only do we have a stock that has tagged the trend line 3 times within the channel, but it is also sitting that this channel also crosses. You see this cross right here. It also crosses the 50-day moving average. And whenever you see a stock that crosses the 50-day moving average and a trend line with a stochastic condition, which is over right here, as you can see right here, and you see the 20 right here. Anytime you see a stochastic that dips below this 20 period right here, or this 20 point right here, which shows you that the stock is oversold, you certainly want to pay attention to it when it's sitting on the trend line and sitting on the exponential moving average line. So we took the trade here, and the stock just went up. And in fact, we're still in this trade right now. But this is anytime you have a stock. Now that's enough about support. Let's go to the resistance. Now we see a stock goes up here. This is the first tag. The second time, this is the second tag. So this right here tells us that this is a point that we really don't want to be in this stock. So whenever you have a stock that is trading within a predictable pattern, and you see it bounce off here one time, and the second time, the third time, if it is a third time, to let you know that you kind of want to, like I said, take this line and just extend it out. And if you see a bounce and you see the stock going up towards that line, whenever the stock approaches this line, this is an area in which you probably want to sell, consider shorts, or at least at a minimum scale back on your position. It's not too much to say about this chart other than that. So what we're going to do is go to the next one. Let's go to eBay for a second. Symbol EBAY. eBay also has, okay, now we're still looking at a daily chart, don't forget. eBay also has an upward channel, as you can see here. But in this case, a lot of times, guys, when you have these channels, a stock may not trade directly on this trend line. But what this channel does is give you kind of a reference in terms of a buy point. Like this is a reference. Anytime the stock comes down near this line, like for example right here, or near this line, a lot of times the stock, like in this case, can be so strong and moving so far up, there can be so much institutional buying that although when it comes down and hits the trend line or near the trend line, when it goes back up, bounces off resistance, it may be so strong that the stock may not even come toward, it may not even tag the support again. As you see here, it didn't tag it here, it didn't tag it here. This stock is so strong that it just continuously trying to just break out this channel, and it doesn't really comes down. And we see finally a bounce off of the 20-day moving average, and what happens? This stock just breaks out of this channel. So we're going to talk about breakouts later, okay? But right now we want to look at how you can benefit and make money using upward channels. The way you make money from using upward channels is to first identify what is an upward channel, which we already know is we have a stock that trades within a predictable price pattern. This is an upward sloping channel because each low is higher than the previous low. You see, this low is higher than the previous low. This low is higher than this previous low. The same deal, and this low is higher than these previous lows. So the stock just continuously trades up, and this is a strong, very strong stock when you see these patterns. The third one we're going to look at is Kimco Realty. You see that it's the same deal, guys. You want to try to identify these patterns. This is one that we have traded in the past also. So we see the stock kind of basing out right here. Then we see the next low here. Okay, that's a buy point. And the stock is, again, it's so strong. This stock is so strong that it doesn't even come down. Once it bounces off resistance, it doesn't even come down to the support area. So a lot of times you want to look at the trend lines as well as the exponential moving averages. That's what these lines are. We talk about exponential moving averages later. But for right now, we want to pay attention to stocks that trade in a predictable pattern. A stock that starts here, tags this same line here, but these are sell points, tags the same line here. You see, so you just take, the way you plot these lines is you just take a high and extend it upwards. Just extend it upwards. It's just infinitely, just extend it up. And you will see a stock just trade within these two, in between these two levels. The resistance here and the support here. And let me see what else we have. So whenever you, let's just kind of just go over it. Let's just pick any stock. Let's say Ford. Let's look at Ford. So when you, because Ford has been on to travel upward for a sec. The same deal. Okay, I did plot Ford. Ford. It's again. We make a lot of money off of this stock. We see, because of these chart patterns, we see Ford once again. We see Ford. Just as the case with eBay and First Solar, Ford comes down, hits a certain level, comes back, tags that certain level. Ford is so strong that on the move down that you see here, it trades off the trend line. Or I'm sorry, the exponential moving average, the 20, and the 20 also here. So this stock is so strong, and we look at the stochastics being embedded, that this right here, we see this stock being so strong that it doesn't even come down near the previous lows in terms of the trend line. This is another very strong stock. But now, whenever you see the stock reaching resistance, no matter how strong it is, it has to have time to come down to restart again. So we take this line and just extend it out. And whenever we see Ford touching this line, which would be around this level, maybe around the 15 or 16 level, we know that's the area in which we want to sell. But for right now, this necessarily would not be a good buy point for myself. Where would we buy this stock at? We want to buy it right here on a pullback. This is off the resistance line pullback. Or a lot of times, this is a pullback right here. This is a good buying point. This is a pullback to the 20, another pullback to the 20. But right now, we really wouldn't want to buy this stock right here, because a lot of investors who get in right here are looking to sell up here, because this stock, certainly, we look at the oversold stochastics, the overbought stochastics, and this certainly is overbought. So this is so when you're looking at and you're doing your research, let's look at AT&T. When you're doing your research, it's just a company I'm just looking at, just to show you guys how to plot an upward channel. Oh, this is the same deal. This is one I have plotted in the past also. And these stocks that are stocks that we have made money off of. Now, when you see a stock break a support like this, you want to be out right there. Whenever you see a stock trading within a channel and suddenly break down, you see a channel break down, you want to be out of that stock right there, because you don't want to be holding this stock. You don't want to hold a stock because at some point the stock will trade above, or it will break out of this channel to the downside. So that's right there. Anytime you see a break below this channel, that's when you want to be out. So I'm glad we did look at AT&T. Thank you for visiting us here at www.tradingstockslive.com.